Well, tri-states there is making them japa back, and we hope to see more japaing back, as they say there. Well, let's look at the economy, macroeconomy, Nigeria's macroeconomy details for the month of July. As we heard this week, we're expecting inflation numbers, and we're hearing of not so good news, especially with the drop in the value of Naira late last week, which seems to have been sustained. Well, we have joining us for this commercial. They did carry out their own research looking at the economy in the month of July, and to help us understand some of those details is the co-managing partner of Commercial Partners, Mr. Nnamdi Nwizu, to share their report, the July 2023 report with us. Good morning, Mr. Nwizu. Thank you for your time.
Good morning. Great to be here.
Great. So I guess your findings, or whatever you have captured in your report, is what Nigerians are living with: the high inflation, food inflation at more than 25%. We're expecting the numbers again this week. And of course, the issue of the FX shortage also getting worse. But in summary, what can you say about the Nigerian economy for the month of July?
Well, the reports that we had, the macroeconomic reports, pretty packed, but I mean, due to constraints of time, most probably just try and touch on a few things. So, I mean, we can look at the power market, look at our reserves, GDP growth rate, and also touch a bit on market cap in the stock market, right? And naturally inflation. So let me start with inflation. I mean, we saw an upswing. Inflation now at roughly about 25% or thereabouts, right? If you look at it, we've seen big moves in things like food inflation. We've seen moves in, inflation at 22%. We've seen moves in food inflation. We've seen moves in core and non-core inflation, right? And we all know, we've seen what's happening. We've had petrol prices continue to rise. And with that, naturally, we continue to see the impact across various segments of the economy and naturally impacting on inflation. And we continue to see also what has happened with the currency. Apart from removal of first subsidy, the currency also affecting food inflation, because we have quite a lot of imported food items coming in. So your imported food inflation continues to rise. We look at the foreign exchange, closed the month of July at 865 in the power market, but I think with about 750 or thereabouts in the official market, in the interbank market, right? We continue to see the difference widen. And if you look at where we are now between July and today, which is August 15th, it's even gone wider, right? And I think we know that major challenge we're facing right now is that we continue to have a supply issue where we don't have enough supply of the US dollars to meet the demand that we keep seeing, across the various segments of the economy. And that can also be explained when we go into the FX reserves. FX reserves closed the month at 33.95. But we recently saw the central bank release its financials, which explains why they've struggled to intervene in the market. I mean, prior to suspension of the central bank governor, we used to see monthly FX sales of roughly about $500 million. But then the amount reduced to about 60. It's increased a bit to about $140, $150 million in a month. But it's still a far cry from the $500 million monthly sales that we saw. So naturally, that's continued to put pressure on the currency, both at the interbank market and in the power market. I mean, with the reduced sales in the interbank at the auctions, well, there are no more auctions now. It's just basically central bank intervention. So with the reduced sales of FX by the central bank in the official market, we continue to see the pressure move to the power market. And that explains why we have seen the power market start to move again, or move away once again from the official market. For the exchange, we've seen continue to do pretty well, not too bad. Market cap at 34.9 ending of July, which is a 5% or 5.7% increase. over what we had at the end of the prior month, right? We've seen one or two companies or sectors struggle, which is expected. So we've seen the consumer goods and insurance struggle. Consumer goods mainly due to their FX commitments. We've seen huge losses coming out from that sector, results released by the likes of Nestle and Co., which shows that, the depreciation in the currency, because they have FX obligations, right? Other loans that they've taken from their parent companies or maybe LCs that have been opened and haven't been paid. And so that huge jump in the currency has basically led to huge losses. The last figures we saw from reported companies came to almost $500 million in losses for $500 million in losses for the companies. So that continues to be a bit of a challenge, and that explains why we've seen that sector struggle with regards to the stock market. But at the same time, we've seen a few other companies do well. Oil marketers are doing well. Naturally, with the removal of the subsidy, we expect to see better performance. We might see some of them start to import petrol, which would be good for their financials. And naturally, a lot of them had quite a bit of stock prior to the removal of the subsidy. So by selling that at much higher prices, naturally would impact on their financials. So that has been pretty good. I've also seen the banks do well, especially those who have large FX balances or balance in their books, right? Because once again, the depreciation of the currency would lead to better results, better performances for them. And we're still waiting for some of them to release their half-year results, the like of Access and GT Bank and Zenith, but everybody expects that it's going to mirror what we've seen with some of the others who have released and have smaller balance sheets and smaller dollar reserves.
All right, Mr. Nwizu, let me also bring another good news that I think we saw in the first quarter, which is the GDP. We saw that the GDP was up 2.31% in real terms. Can we relax? Because a lot of people say, this just passed over us. We hardly felt the impact. We didn't see it.
Well, so not necessarily good news per se. It's a 34% reduction compared to where we were at the end of 2022, right? So quarter on quarter, a 34% drop. However, we know that a lot of it would have been attributed to the Naira scarcity, redesign of the Naira. We all know the impact that we had. Trade really ground to a halt, and that seriously affected commerce within the country, right? However, with the new rules around, or rather with the suspension of that policy, and then also looking at the new or the major changes made by the new administration, we expect to see the GDP start to rise. We expect to see a much better performance and higher growth. We should be looking at GDP nothing less than about 8-9% for a growing economy like ours.
Well, you see us hitting the 3% that has been the project or the forecast. I think 3.2% for the year. Or let's talk about the second quarter. Second quarter has ended at April, May, June. We expect the numbers to be out. Well, which of these indices do you think will change? Maybe will be better at the end when we look at the numbers from the second quarter?
Well, I expect the GDP growth to be better. Like I said, with the suspension of the Naira redesign, well, not the suspension, but with the release of Naira back into the economy, I expect to see that improve. We expect to see oil production continue to rise.
Yeah, but it fell, it fell the last month. It's down. It's like, I think, the last one it was down.
Yeah, but we expect to see the effects of the new service chiefs that have come in, right, start to basically impact the performance in that sector. We've started to see them roll out, and we've started to see them try to fight crime in various places. So we expect to see some effect on the production when the things that they put in place start to basically show or start to take effect, right? We also expect that we'll start to see an improvement, most probably in capital importation with the depreciation of the currency, it makes it more attractive for people to come into the country. So with that, we see that improving. We don't expect the parallel market to improve month on month. I mean, I think those are the major things where we think we might see an improvement right now. Stock market has rallied hard. I'm not sure how much further it can continue to go in terms of an uptick. So I'm not sure we see that rally, that hard rally continue, because we've seen quite a move if you're looking at where we were at the start of the year versus now.
So we see this acting CBN governor now announcing that there will be a change of name, the I and E window. But I don't know how much that will go to deal with the problem we have there, because it seems the major problem we have in the FX area is supply.
Yeah. So I agree. I mean, I saw that news headline. I've not delved into to see what exactly will change in terms of the modalities and how they intend to implement it and see what difference it makes. I think that you really, like I said earlier, we do have a supply problem. We need to start looking at ways to increase FX reserves to help us with the currency. I mean, there's some things that people look at as short wins. One would be the sale of non-performing government assets, and preferably try and sell them in USD, so you get USD inflows coming into the country. So you start to once again build the reserve and have some accretion to reserves. I think that and trying to ramp up our production would help and would be quick wins. No matter what you're doing on the monetary policy side, unless you can sort out the fiscal policy side, which is one of the things that was mentioned, it's going to be very difficult for you to see that that supply that you really want coming in. If you don't sort out your security or sort out your oil production, if you don't sort out selling some assets, reducing the strain on government, bringing in dollars, and basically look at also quickly telling us which ministers are in charge of what portfolios, because that's extremely necessary. Then that way we start to see what the policies will be for the various ministers who will take the various portfolios, and it starts to give a bit more clarity on where we are going and which areas people should start looking at investing in the economy, right? And then from there we start to see some progress on the fiscal side, which will help what is being done on the monetary policy side. But I don't think just changing the name from INE to, I believe is
NFEM.
I don't think that's what's going to change or suddenly increase the supply if you don't take it have a holistic approach to it.
All right, thank you so much for your thoughts. We don't remember also that I think last week CBN did say that the remittances from diaspora is going to the informal sector, but I guess these are all the things that we need them to sort out so that we have a good supply. Well, thank you so much for your time this morning. Co-managing partner with Commercial Partners, Mr. Nnamdi Wizo, and you have a great day ahead.
Thank you.
Well, we're talking more about our FX shortages and how we can get more supplies with Mr. Chukwu Nwachukwu. He's in our Abuja studios and joins us after the break.